Hi guys, weekly market outlook today, 19th of October, and what a week this was for precious metals. Silver through the roof, gold rushing to higher levels, stock markets, well, they kind of created a new all-time high, most of the markets at least, but then they came back. We shall examine whether there is further upside potential being expected. Remember, elections in the US, or we might see a downside potential as well in the equities sector. Oil prices offer quite some volatility, or they started being extremely volatile earlier in the week. So any outlook next week might be interesting. And we got an interest rate decision coming up. So we shall examine on the Canadian dollar and the further potential or movement we might examine. So let's start with our session here on Saturday and check out how the markets might perform. Obviously, positivity in the equity sector is and might still be the big question moving forward. With that, we shall take a look and now check out the market momentum. The S&P 500. Let's start with a fresh chart here. Upside this week happened again, right? So from one high to the other, we saw some slight tiny rejection. Then the week prior, we saw a breakout. And this week again, we saw that the market went towards higher levels and then boom, even went towards higher price areas. And that might indeed be some sort of a positive push here. The market's trend is extremely positive. That's what we can see in the S&P 500. The momentum, well, there is not really overbought territory here right now, which we see. We can examine, and that's the interesting part. There was a bit of a resistance, right? And there was a bit of a basically a kind of a trend in the RSI leading to some losses, and we have the trend in the charting pattern causing the price to move higher. So that sort of divergence, as it's called, is actually or has been kind of not active. That said, upside in the S&P might continue with positive sentiment potentially really moving forward. Looking at the NASDAQ, there is not too much being expected. The market is kind of tiny or moving higher in tiny baby steps. Whether they last further and whether they cause the market to be extremely positive, I might say, well, if the positive sentiment in the overall market is kind of persistent, even the NASDAQ is potentially rising to higher price levels. However, with potentially less motivation, less market insightful momentum, with just tiny amount of space here causing the market momentum to be positive. That said, upside potential kind of being a key part here, where the trend line, if we drive it here from this bottom and ignore maybe this fact here of the recent break below, we could see that the upside here is going to kind of cause as well the market momentum being positive based on daily charts. Weekly chart, we see the same story, and hence obviously the general upside momentum being a key takeaway in this case. The Dow Jones, well, not too much happening here apart from upside potential as well. So there was a rejection a couple of days back. However, this was made up straight away the day after potential happened, and that's actually what causes the market to be and remain positive. Dow Jones obviously kind of really the game changer here. And who might wonder about the German index? The DAX is rising further. The economy is really in a bad shape. Figures are, and competitiveness is actually quite bad. If I'm correct, place 24, 25 from 67 countries is what Germany currently accounts for. Why that? Simply attractiveness, competitiveness in Germany is so weak and not positively in terms of an outlook, and that means that maybe Germany, the recent locomotive, has stopped working. That said, we see figures are coming basically soon. Purchasing manager index on a slight side note here as well expected to kind of fall somehow, looking at the recent figures from May, June down. So we see a consecutive downfall or a downfall in this recent trend momentum. Purchasing manager index obviously kind of quite bad. Looking at the figures from France, for example, they are actually even better. And if I'm also not wrong again here, we have India, growth in India rising the most globally. Then China, followed by China, second place. The growth projected for the entire world, 3.x% for the year. Germany, maybe 1% next year, currently 0.3% minus. So we don't see that there's any positivity. So that's translating towards a strong DAX. Well, in the future, maybe not too much. It's maybe more the old story of the recent money flows. The European Central Bank reduced rates this week. You guys remember the euro weakened subsequently as well, but that trend kind of translates as well to potentially further market pushes into the equity sector, with the US dollar playing its role. We'll examine this in a minute, but the euro and the ECB with lowered interest rates might actually be accountable for the upside here. Money flows into the financial markets, and potentially a bit of a cheaper euro is something which causes the the DAX to rise further. The trend in place. Would I buy it? Not at all. Would I sell it? No, quite not. But the market's momentum here leading towards upside areas is at the moment at least kind of quite positive. But look at that. On the monthly, we are approaching overbought territory. Is that a reason for the market to turn around potentially towards falling prices? Maybe not, but this could be a reason for some potential warning signs on the horizon. So this market might be ready for some sort of corrections, at least medium term. We mentioned the euro, so let's eye on what might go here. Well, the euro has actually strengthened kind of fairly recently. The recent couple of trading weeks, let's examine how many weeks they were. 1 to 3 weeks, the markets turned totally to the downside with this recent breakout, and we had this kind of a trend line break, if that's the correct trend line, somewhat. The break here causing negative potential. Last week, negative potential, and we said this week, let's keep an eye on this 50 moving average and see how this market goes around that area. If this 50 moving average can be retested again maybe next week, we could see some upside in the euro. After the ECB on Thursday, after the interest rates decision, the euro weakened since obviously rates had been lowered. That's obviously kind of something which is weighing negatively on the euro. If interest rates are being reduced, this harms the attractiveness and the competitiveness. However, we can as well observe that in this case here, the upside has been resumed. The daily chart showing a clear push to higher levels. And this recent breakouts to higher levels might be what causes the markets to set itself up for rising prices. Euro, potential higher momentum. That is what we might see. And let's check out again figures on Thursday in terms of the PMI data. Purchasing manager index data is what could be something we should observe, as this is more or less the only important data for the Eurozone moving forward. Speaking of the Brits, we have on Tuesday Governor Andrew Bailey's speech. Well, we shall see and compare the pound's attractiveness, comparing it to the euro and to the dollar. The pound started to replay its upside, and that looks actually not too bad. Looking at the trend line here, we could say if the market, and that's a clear trading opportunity here, if the market breaks the supportive red colored trend line, downside might continue. If the market keeps on rising above this area, the upside might be in play. And we should not kind of forget about the strong bearish push here, longer term weekly charts, but we should also take into consideration that medium term, the market printed a bearish pattern, but was able to rise slightly at least. And that's the question now. Will we see the dollar to resurfacing with further strength? Will we see the euro falling or continuing its fall? Will we see the pound weakening and the Australian dollar weakening? We might see that ahead moving forward. However, looking at it from this perspective, A look at the dollar index gives us potentially some sort of feedback. Same story, reinverse as always. Correlation, euro dollar falling and the dollar index rising. But now the dollar index is at a major resistance with this 50 moving average, just paving the way for falling prices. So if that zone basically lasts, if the market is able to kind of run lower, we might say that and might see further downside motivation to continue. That's at least the story here on the dollar index moving forward. Vice versa, if the market is going to basically rise to the upside as we see and imagine, right? So mid of the month, slightly beyond that here in October, we saw that the market's falling momentum was totally rejected. The market went higher, dollar index leading to the upside. Medium term, this might call for upside momentum on the greenback. Short term though, this might call for currently just a bit of a correction as the pattern shows here. Overbought territory might be just a reason for slightly falling prices. See how it goes here and went in the past, but the upside in general for the US dollar is simply what could be a reason for some dollar strength and then for the consecutive motivation in the euro and the pound to potentially fall against the greenback. As we said, the Australian dollar is kind of a key takeaway here for now. Risk sentiment. We examined the stock market, the S&P 500, NASDAQ, Dow Jones, even the German DAX. Now, this is something kind of quite positive when the market is able to, or should the market be able to rise beyond this level here. There might be some upside motivation, trend line break, supportive trend 67, psychological support area, lasting, causing upside momentum. The 50 moving average has basically been tested, but just caused the markets to basically rise off this area. And if the market obviously kind of continues to rise now, the 50 moving average will kind of be bent to the upside as well. The latter figures at least, and that's something which could be a kind of an interesting area. Wow, such a straight line here could be something which is potentially leading towards a targetable area at around the 68 or so, 68.50 area. The next line in the sand, at least here, might be something which is causing the market potential to remain positive here moving forward. Now, one of the big spotted opportunities this week, silver. This was just such a nice Friday afternoon here, having potentially had another drink, afternoon break, whatever you guys did. But silver throughout the trading day, that's one of the rare days here we can observe, there was like a full steam to the upside happening. The 32.20 resistance area, we talked about it, pulverized. We mentioned this earlier as well. If the market breaks this zone, potential upside momentum continuing. 33.70. So basically just $1.50 more than that of upside momentum on the week. This is like another strong week we have seen. Basically on the month, we are now able and we might see the market to continue its uptrend here. 34.65, 34.70, 35, psychological 35 resistance zone might be one of the next targeted zones here as the upside potential is going to unfold somehow further. There seems to be the sky is the limit. Dollar stronger, silver not impacted at all by a stronger US dollar. Instead, the market just continues to move from one level to the other and the trend potentially unstoppable as the market shows. Gold, same story, not as strong, but yeah, we saw already this year the market kind of pushing from 2000 something all the way up towards the 2700 something area. That's like such a strong move. Is the world insane? Is it moving into crazy figures? We don't know, but one thing we know, even gold prices continue, and my chat with a fellow trader on Friday was like, Frank, we might might hit 3K before the end of the year. And I might say, why not? There is a strong motivation. The market is in strongly overbought territory and might hence fall. But it is not falling. The market keeps on pushing to higher figures. The market keeps on pushing to the upside, telling us there might be some opportunity moving forward with volatility kind of sparking upside momentum. And hey, let's forget not about some ETF stuff, right? So silver moving back, SEL ETF, I'm in a long position, have been in quite a long while in the early 20s, and this is now helping me nicely. The market momentum is showing potential towards the 48 US dollar level. That's even paying a couple of cents of dividends. If I'm not wrong, won't be much, but yeah, just a little bit here. And GLD, they basic counterpart in a way, if you would eye another ETF on the gold market price level here. There is no dividend yet for this one, but even this one is basically kind of showing that upside in gold, in silver, is going to potentially at least be moving forward, positively moving forward section here. And with that, we can be prepared for some alternative investment opportunities here in regards to looking at the all-time highs or near all-time highs in the equities sector. How is the oil market kind of moving? Well, geopolitical tensions have kind of found some easing pattern for now. We see oil weakening. Petrol prices currently in Germany not really falling much. It doesn't really matter anyways, but in this case, the market's momentum, oil kind of quite weak. Moving forward, we are now really back at these levels, and at that level, which we said, if the market asks us to potentially run lower, we say, yeah, we will answer with selling pressure and selling opportunities here as well. Below the psychological level here, that's the 67 US dollar support zone. If it breaks, the market might fall further. Looking towards the end of the month, this might be some positive feedback here in a negative way. The weekly chart had really closed near the lows, and the next line in the sand is exactly the zone we are currently having in mind here. 69.25 is the line in the sand where the trend line exactly looks kind of quite bad and quite weak, with the oil market obviously offering quite some downside momentum as the market suggests. So oil weaker, demand lower, figures from China not as positive, economic outlook in China mixed picture. Obviously, the Chinese markets, equities, index, whatnot, Chinese indices, Hong Kong, the Hang Seng starting a push to higher levels. However, they were kind of talking some weakness the last couple of trading days, again after stimulus patterns being released. So we have a mixed bag of information here, and obviously falling oil prices give us some sort of input here. Geopolitical tensions is one thing, but economic demand seem to be what is behind market prices heading lower. In other words, what else do we have? We talked about most of the stuff. Cryptos rising, Bitcoin looking kind of quite interesting, options, ETFs being kind of something, or the latest talk of town, as it seems. Bitcoin rising to some extent, Ether doing something similarly. Looking at the daily chart, a breakout potentially in the making. XRP not doing anything much. The reversal, the break, the fake out here against the 50 moving average might cause the market to weaken further. Litecoin, however, Litecoin gives us some lightning stark opportunities here. The market shows a total turnaround to the upside. Some ETF, Canary Wharf is chatting about could be what is behind the market's rising momentum. At least this market looks like kind of a cool step moving forward, especially when looking at the reward risk ratio. 77 something is the zone here, 270. If we can see a threefold increase, then we might be ready to see and celebrate it should we spot some upside potential moving forward. Once more here, the resistance zone, if the resistance zone is being broken, which it seems, support on the left, let's mark it out here again. Support on the left is the, why is it not moving? Support on the left side here, and resistance resistance on the right. So question is, will we see another resistance and a bit of a retracement and then a breakout, or will we see the market breaking higher, retracing slightly and then breaking to the upside? In either case, the market's upside momentum with the whatever X100 resistance zone, say here, that's only the 100 area, we have the 85-90 area, might be something which is just giving us a strong amount of upside potential, where the crypto market in general might follow what we see currently and celebrate currently in the equity sector, the upside potential at least being the key takeaway in markets. So guys, for the week we have plenty of news, Bank of Canada interest rate decision, PMI data and such, to basically give us further insights potentially from the US, from the Eurozone, as in France, Germany and other member states. In terms of markets, we would expect gold and silver to continue its upside. We would expect that silver might especially follow up with the recent push, since the breakout zone had been pulverized big time, and we might expect that oil markets might continue with their move to the downside, as the market momentum currently suggests. So stay tuned for further updates throughout the next couple of trading days. Please don't forget to leave your comments if you've made it all the way towards the end of the video below, and give us a like, as well as obviously some follow-up in the next trading days. Guys, happy trading. Talk to you soon. See you then. Ciao.